Businesses don't go bust because on paper they can't generate revenue or they're not profitable. Most businesses go bust because they run out of cash. And why don't more businesses put more focus, more attention onto having a robust, well thought through cash management strategy? Because it breaks my heart when I see the failures of businesses that's down to this fatal mistake.
It's a double whammy. Not only do you struggle, but if you don't manage your cash well and you need to stay afloat, you're gonna have to borrow, right? And I've been a managing director of 2 banks. I charged people for giving them my money. So actually, all that does is add to the cost. Whereas if you manage your cash well, right, and you get your money in that's owed to you upfront, halfway through the deal, third at the end of the deal, as you mentioned in your report, the reality is I can manage my cash. And you know what? I don't need to be good at maths. I look at some of the software now on offer, whether that's Zero, whether that's Free Agent, whether that's Sage, QuickBooks. It does all your cash management for you. What you've got to do, and sometimes business owners, I get that they're busy. Being busy in the business is not helping your business. Take some time out, sharpen your axe, as I mentioned earlier, to actually say, how can I look at my business through a business lens? And when can I go through this report and do this checklist and make sure that regularly I have a good understanding of where my cash is coming in, where it's going out, but not just where, but when.
Yeah.
And the really smart businesses get paid up front and then pay their suppliers later. So they're always cash positive. As a result of that, they're able to use that positive cash position to generate more revenue by putting it in a 45-day notice account or a 1-month bond or a fixed rate. So they're always using money smart. That's what business people do.
Yeah, and here you're measuring one key ratio, which is your debtor versus your creditor days. What's the average days that your clients are paying you, and how quickly are you having to pay out to your suppliers? And the key trick here is making sure that your debtor days, i.e., you're getting money in before that you're paying out your creditor days. I'd say what scares me, Chris. I had a client the other week who were really happy that they were telling me, actually, Royston, we work with a lot of corporate clients. Our average debtor day is running at 42 days. I was like, okay, great. So that's from when you send the invoice out. Tell me, from completing the work to getting your invoice sent out by your finance team, what's that number of days? They're like, that's a really good question. We don't know the answer to that. I just worked out what my debtor days were from the invoice going out. They went, and this is a business that was struggling for cash and they couldn't figure out why. So they went and looked at it and they came back and they went, Royce, you're not going to believe this. 62 days is our average from finishing a piece of work to then raising the invoice. Then they've got 42 days on top of that. So they're actually running at 104 days, 106 days in terms of their debtor days. And then they wonder why they've got a cash flow issue.
If you're prioritizing things as a business owner, actually getting your invoices out within 24 hours of the job finishing surely has got to be one of the functions of the finance person or the finance team, because that's when the clock starts. So I would be sitting there almost. One of the first jobs I would do in the morning as a CEO or a business owner is make sure that I had a list of all jobs I'd finished where people owed me money, and that invoice will be gone within 24 hours, and the finance team copy me in on the invoice so I know it's been done. Because what gets measured gets done. Inspect what you expect. There's lots of phrases about that.
Yeah.
So I think it's really important. But again, if no one's taught you how to run a business, if nobody's actually read a report like the one you've written, Royston, it's not necessarily their fault. But the good news is, now that they know there are reports out there, a playbook as you call it, I think the worst sin crime would be not to order it and not to do anything with it. And I think that's fatal mistake number 7. I know we've jumped ahead, but getting things done rather than talking about it.
Yeah. I want to stay with this cash management, Chris, because I've got so many examples of this, but I just think this is the one that I see, because this is what kills businesses. This is, the oxygen that feeds your business, and particularly for a growth business, you've got to get cash flowing through your business. Even I sat on the board of a financial services business for 3 years. Really successful business. They grew phenomenally, ended up selling for an 8.5 times multiplier. But I remember going to one of the board meetings recently and sat there, And the opening agenda was banking status. And that was the opening agenda at the start of the meeting. And everybody went, Royston, this is your agenda item. We're not sure what it's about, but you've got banking status the first. And I went, guys, I just want to say congratulations. I didn't realize we've got a banking status license. They all looked at me and they went, what do you mean? I said, I've looked at our debtors. They're absolutely horrendous. What is going on? Are we become a lending organization? And you could see the smile on people's faces like, guys, we can't manage a growth business if we're not effectively managing our debtor book. And either we're taking on the wrong kind of clients that they're not paying on time, or we're inefficient in terms of our ability to complete work and then send out the invoice, or the invoices are being questioned because people don't believe that the invoices are correct and the value. But what is it? What is stopping us from being able to complete our work, get the invoice out, get the cash in, and keep the oxygen feeding the business that keeps us growing? I'm really struggling to understand. I'm really interested in your take on this. I know a lot of intelligent business owners, business leaders who just, for some reason, they neglect their cash management strategy. Why does that happen?
I'll tell you why. Because somewhere along the way, they think the only measure they need to look at is bad debt, not late payers. And you know what? Often it's not the bad debts that kill you. It's the fact that, as you say, I have to pay my money out to my suppliers before I collect it in. So instead of worrying about bad debt as the only item on the agenda, what you should be doing is going, what is my cash flow position?
Yeah.
And how quickly do I get cash in? And how quickly do I pay up? And as you say, if you can get the days where you don't have to pay people to be longer than the days that you collect it in, you will have a positive cash flow. And as a result of that, you can make the money work for you. But I think a lot of people have been given the wrong things to measure in business. And I don't know where that's come from. And if they've got advisors and accountants for me no longer do the books. They shouldn't. They should be absolutely trusted advisors and partners, and they should be telling you things that you've put in your report. Because I'd be asking the question, why would I have a relationship with an accountant who does not give me advice? I would change accountants.
Yeah. But I think there's so many accounts who have not made that transition, and they're becoming irrelevant because, as you quite rightly point out, QuickBooks Zero does a lot of the automation about producing your management accounts. So therefore, the job of the accountant now is not about producing management accounts. It's about providing insight and expertise beyond the numbers, that actually what's the story, the narrative that the numbers are telling you, and providing that expert guidance about, if you continue on this pathway, this is what's going to happen. This is the pain and this is the gain, and these are the opportunities and these are the challenges. I'd see so many accounts who are still, they've not made that transition.
And you know what? That goes back to when you look at your costs, right? You should ask yourself the question, what does my accountant do for the money I pay them? Do they give me advice? Do they phone me up? Do they sit down with me? Do they want to understand the plans I have for my business? Where do they fit in? How are they going to help me? What is a good challenger bank for putting deposits with? All of this, people should be giving you advice. They should be giving you advice on paying the right amount of tax. And what's really interesting, and again, I think it's another alarm call for the accountants, is next year, from April next year, small businesses have to do managing tax digitally. And any self-employed person or landlord who's earning over £50,000 a year, so £1,000 a week, right? That's pretty doable. They're going to have to send quarterly income and expenditure statements. Now, in a way, that might really help businesses focus on where they're getting the revenue and where they're spending the money. If that's another example of you being able to deal with the revenue direct, then you've got to be asking, why am I paying an accountant 800, 900, 1,200, 1,500, £2,000 plus per annum?
Yeah. No, brilliant. Fatal mistake number 3, no robust cash management strategy, no fuel, no growth. If you go to the report, it will literally walk you through step by step how to create a robust cash management strategy and the metrics that you need.